Thank you for tuning in today, guys, to my latest video here at Airbnb Rental Empire. I appreciate all the new subscribers. I appreciate the questions, the comments, the likes, all that stuff. Keep it coming. I'm here to help you guys. Today, I want to talk to you about something that is front and center in the media and front and center in our lives, and something that we're dealing with, everybody is dealing with, and that is inflation. Inflation, for those of you that don't know, I think most of you do know, but it's a rise in the price of goods and services and a decrease in your purchasing power. And I think anybody that's, living in the United States or living in most of the world for that matter right now is seeing inflation firsthand with an increase in the price of all the things that we're buying on a day-to-day basis. I know if I go to Home Depot, my 2x4 that I need for whatever used to be $2 and now I'm paying $6 for it. Items that I'm buying on Amazon cost more money than they did before, and I know that for a fact because especially I'm looking at, I have, sheets and different materials that I buy for my Airbnbs that I buy the exact same stuff. And I can go back and look at the old receipts and I can see a lot of these things I'm paying, 20-30% more than I paid before, which is crazy. These are high rates. We're seeing inflation in grocery bills. The global food price index was just today came out. It's been its highest that it's been in 10 years. So, how can you say that there's no inflation there? You have the Case-Shiller home price index came in at 19.1%. That's reflective of the home prices in the United States. That's the highest level since 1987. That is inflation. You have the stock market hitting all-time highs. That is inflation. You have, Bitcoin going through the roof. That is inflation. All these different things are inflation for sure. It's rising of prices all around us. People may ask, where does it come from? And that sort of thing. There's a lot of different things that it can come from. One, I think it's coming from all this money that people now have that they didn't have before. It's coming from the form of stimulus, government stimulus for all these different things. Obviously there's people that genuinely can't pay rent and were able to benefit from that rent moratorium, but you also have people that are definitely taking advantage of that. They're still working on the side. They're working as a cash business, doing whatever. They're not paying rent, but they're still able to pocket that money. That is, most people's biggest expense is their housing expense. So you think that's not more money in people's pockets? It definitely is. I know I see all this from even, me operating all my Airbnbs during the pandemic. I was getting a higher rate than, we're still in the pandemic, but I was getting a higher rate in the depths of it than I did the year before, which is crazy to think. I'm like, where do all these people, I thought I wasn't going to have any travelers. I'm like, where do all these people get all this money from and have all this money to spend? I was getting higher nightly rates during the pandemic than I was before, which is, just ludicrous. In addition to, the things that I just mentioned, the stimulus, the rent moratorium, etc., you also have the Federal Reserve. They're culprits in this. The government is culprits in this. You have the Federal Reserve is buying $120 billion in Treasury securities and other securities as well, but $120 billion per month they are purchasing on the open market. So they're taking those treasuries out of the market, artificially keeping interest rates low. And when you have low interest rates, that drives up asset prices. How does that do that? It drives them up because people's mortgages are lower, so people can afford, more house. So their home prices go up. Then it also, it keeps interest rates low. So the 10-year treasury is considered risk-free interest rate, meaning that is the interest rate that you can get on the market essentially with no risk, because the government is going to pay you that interest rate that is on that bond that you have. So, people are going to, when that interest rate is very low, people are going to, that's going to inflate other assets because they're all being compared to that. So you can now pay a company that, let's say a stock that you're about to purchase, they don't need to be making that much money because all of a sudden you're comparing it to, okay, I can get 1% interest rate, interest-free, risk-free, and so now I can get, let's say 3% as an example with this company. It makes sense to pay a higher valuation for that company because you don't need them to profit as much as you would if the government was paying, let's say they were paying 6% on that risk-free rate. So you're going to compare something that you're getting 6% interest with essentially no risk versus a company that would be paying you the same amount. Of course not. You're going to buy the risk-free rate. You're going to go with the bond for 6% rather than some stock, some company that may go bankrupt. So you're going to demand a higher interest rate on that, meaning they need to make more money. So their valuation at that point is going to be lower. So that is how these asset prices are inflated by by, the Fed's actions and keeping interest rates artificially low. And then you have the Fed coming out and saying inflation is transitory. That to me is the biggest BS out there, because the inflation is transitory. It makes you think that it's in transit. It is in transit out of here and it's going to be gone. But even Fed Chief Jerome Powell just came out, a week ago or a couple weeks ago and clarified his comments about the inflation being transitory. When they say transitory, that doesn't mean the prices are coming back to where they were. Prices are going to be stuck at the new elevated levels and then increasing from that point. So if you have prices high 10%, 20% higher than they were before, then it's still going to be, the Fed says they want inflation at 2 to 3% or whatever it is. So then you're going to have inflation at 2 to 3% from that already inflated level. You better be able to keep up with that increase in prices or your purchasing ability goes down. You have companies that are, increasing wages. You have Chick-fil-A, Walgreens, Walmart, Amazon, all these companies that are increasing wages to $15 an hour, and I think that's overdue, but that's putting more money in people's pockets also, so that is also driving up inflation. People have more money to spend, they're going to spend more, you have more competition for goods and services. Now, the thing is, you can also think about, okay, what if inflation is transitory and it goes away and, prices come down or prices even just stay at that level? Let's say it's transitory, so inflation is gone. If it's gone and you prepared for it, fantastic. You're ahead of the curve because you prepared for a decrease in your purchasing power by hopefully making more money. But so there's nothing bad about that. You're in a good position if there is no inflation and you prepared for inflation. However, if you don't prepare for inflation and there is inflation, which I think there's a high likelihood of it being consistently now in the future, it's definitely here right now, and I think it's going to be here for the foreseeable future, you better prepare yourself for that. And because the risk of you not preparing yourself for that is, again, your purchasing power goes down. You're not going to be able to afford the same things that you're purchasing now. Your ability to travel, your ability to, whatever the car you drive, all these sort of things, that level is going to come down. Your ability to purchase a home is going to come down if you're not able to keep up with inflation. So, how does this all circle into Airbnb? And I'll tell you how it does. It circles back into Airbnb because with Airbnb, I'm constantly changing the prices. I can change the prices to reflect inflation. And so even like during coronavirus, when that thing first hit, I dropped my prices dramatically because I was able to, and I wanted to get travelers and I had to lure them with the decrease in prices. However, I learned quickly that people had a lot of money to spend somehow even during the pandemic. Presumably they weren't spending money on anything else, so they were able to still at least do local trips. Most of my guests were people that were driving in, etc. But so you're able to adjust those prices to reflect, whether if there is inflation, if you have higher prices across the board, you're able to command higher prices from your Airbnb rental. So you're able to at least keep your revenue at the same level it was before in real terms, in terms of purchasing power. So if you're in a regular 9-to-5 job, they may give you a little bit of an increase, a couple $100 here, a couple $100 there, whatever. You're not gonna, jobs aren't gonna, they don't look at the CPI or look at the real world prices that people are paying and say, okay, we're gonna increase prices increase your wage by 5 or 10% per year or whatever it is, whatever that real number of inflation is, which is more like what I think the number is. I think it's more like 10% per year, personally. I actually just even looked at 3 of my Airbnbs that I had 2 years ago in June 2019. I skipped 2020 for comparison because of COVID and compared that to now June 2021. I got in June 2021, I got 41% higher this year than I did 2 years ago. So that's 20.5% higher in rates that I got this year than I did 2 years ago. So I'm keeping up with inflation, hopefully. I mean, unless inflation is higher than that, which it may even very well be in certain things. But that's why it's so important to protect yourself for that and be in a position to charge higher prices so that you can keep up with the rate of inflation. Because if you don't, you're going to get left behind, your purchasing power is going to go down, and your quality of living is going to go down. And that's really why we have all this social unrest, is because you have 2 segments of the population. You have the haves, the people that have assets, have stocks, have homes, have this sort of thing. And then you have people that don't, people that are stuck in the rat race, people that are working 9-to-5 jobs, hardworking, no doubt about it, but they're stuck in a position where they can't afford a house. The job isn't going to increase their wages, to keep up with the cost of everything else increasing around them. So that is why people are upset, and rightfully so. So, that is why Airbnb is, a great opportunity where you can level the playing field. Everybody can get into it. As I explained before, you don't even need any money. You can get into it with no money. If you have some money, that's going to be beneficial. It's going to help you make it a little bit easier, but you don't need it. Everybody can get into the rental, the Airbnb rental arbitrage and, get a piece of that market. And so if you do that, you have you're in a prime position to keep up with inflation moving forward, because whether you believe it's here or not, it is definitely at the highest risk level that it has been, between all the government printing, the stimulus, the Fed buying back all these, the treasury bond, the purchasing program, the asset purchasing program, where they're spending $120 billion per month on, all these sort of things, the rent moratorium, all these things are causing people, or are causing prices to go up for the other things that are remaining. So, I'm seeing that now, with being able to get really high rates, this whole summer, higher than I had ever had before. And I believe that's also because of inflation. That is inflation, The price of, my houses are higher now than they were before. Same thing, the price of a cheeseburger down at the burger stand, that is higher than it was before. The price of things on Amazon are higher than they were before. That's all inflation, it's all around us. And if you get stuck and you're not able to keep up with inflation, again, I can't stress this enough, your quality of living is going to go down, and I want to see people's quality of living go up. Like I said in another video, I'm a firm believer in a rising tide lifts all boats. So I want to see everybody get ahead. The more people that are ahead, the better society is. People are happier, less social unrest, all these sort of things, and less other, second order ramifications. You have, less suicides, less depression, less domestic violence, all these sort of things that go with people that are unhappy. So, I want to see everybody get ahead, and I think that Airbnb is the perfect tool to do so, where you don't need to have any education to do so. You don't need to have any money. As I explained in the other video, everybody can do it. I got into this business, I stumbled into it, just finding out about Airbnb back in like 2012 with my house at that time. And I started doing it when I was traveling and, renting it out. And then when I came back home, people were still trying to rent my house. And then, one thing turned into another. And then I started renting out other, apartments and doing it that way. Now I'm doing primarily single family residences. But, it's funny how these things, come full circle. I never thought I would be doing this and be in a perfect position for where the world and the United States and the economy is headed, with this, these inflationary pressures that we're living, day to day. And I think they're only going to get worse. And if they don't get worse, you're going to be in a great position to capitalize on it, and you're going to be making more money, and your purchasing power is going to be greatly increased. So that's a good thing. But if there is inflation, at least then you're able to keep up with the pace of inflation, and you're going to be able to afford the same things that you can afford now. Thank you for tuning in today, guys. I hope you guys enjoyed this video. I'm going to be back with next week with another video, and I'm going to be trying to even put out more content, because I do have a lot of things that I want to teach you guys about this to help you guys get started and to expand your existing business if you already have one. So again, if you haven't subscribed to the channel, please do. Send me any comments, questions. I will make sure to answer those, and good luck.